All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Thursday, May 30th. So we will go over today's price action. First thing, just from a very high level, this market has been trying to kind of figure out what direction it wants to go into next. It's been very whipsaw. Of course, you're going to hear the word chop a lot. These markets are really difficult to trade and just overall, but if you're trying to trade options as well, and if you're not someone who is just scalping from 5 minutes to 5 minutes, it is very difficult, right? I'm more of a swing trader, and I will tell you that this is a very difficult environment to trade in. And so let's go over, I think there's definitely some negative things happening. There was just an article that I just saw by Lipper talking about the overall I believe it was high yield. They said high grade bonds, but I believe what they're talking about is high yield bonds. $5 billion of outflows for over the last week. That is mutual funds and ETFs. I put these numbers out daily for ETFs, and I calculated $2 billion. Is that crazy alarming? Well, just to put this in perspective, because I know these headlines try to scare the bejesus out of everybody. I mean, here's the outflows in HYG. Yes, it had 2 days of outflows here, but do you think that's really that unusual for this fund? I don't think so. JNK is the other one in this space. This one had a little bit more for this size of the fund. But if you're looking back over the last year, the green bars are the inflows, the red bars are the outflows. They're really trying to scare you. Yes, there's no doubt there's some risk aversion. There's been, you don't have to. I should say, unless you've been living under a rock, you know what's been going on in the Treasury market. It has been going bonkers in terms of moves. So I think, so kind of forget about this for a minute. And the one thing I think to think about is high yield spreads, right? And I think you want to do this. I've talked about this before. You want to duration match this. So you don't necessarily want to use TLT versus HYG. What I use is, let's see if I can find it in here. IEI versus HYG, right? You want to have the same duration. So this is high yield spreads. This is what happened in December, right? There was really that knee-jerk reaction where spreads blew out between treasuries and high yield. Notice it is ticking up here. It's higher than where we were in March, but we're definitely not at the levels. So that's a good thing, right? And I'm going to go over some charts through this end of day recap, and you're going to see some good things and you're going to see some bad things. So, the conclusion is going to be, you just have to kind of get through this and not get overexposed, is my feeling. With what is going on. And again, this video is for information purposes only. I'm not giving out any recommendations or anything like that. We're just talking information. So please don't confuse that. I never, every time I do one of these videos, I make sure I say that. But so this is not painting a horrible picture. Is it an uptick? Yes, in terms of this. And this is important because the fixed income market is much larger than the equity market. And really and that's why I think, we've heard this headline over and over about yield curve inversion, which I'm not going to get into that. I'm more concerned about the spreads when there's panic, which is what we saw basically towards the end of December, and then they settled in after that. So what else? Another thing that I want to talk about. So I said this I don't think is that bad considering that headline. Something else that I watch is been watching the relationship between EEM and SPY. So I know some people, because I do like to, when people say things like this on Twitter, I try to give my opinion about it. EEM was up 0.5% today. So some people are like, oh, that's not that bad. That's pretty good. But notice that this happened back in October, right? And again, if you look at what happened back in October, that's not such a great picture that you want to see. It's if you think about this intuitively, right? I mean, the first thing, like EEM is more of a leading indicator, right? So as I feel small caps are. So they started to go down first. right? And now what we're seeing is the US equities follow that down, and EM is no longer going down. But remember what happened back in last October, right? So October, the beginning of October was where we started to lose the uptrend, and we had a couple bouts of trying to recapture it and failed. So if you flash back to to the chart that I just had up, and October was where EEM, so that wasn't necessarily a good thing that EEM was outperforming. All right, so that's one of the bad things. I don't think it's nice that EM has stabilized, but I don't think that you could look at EM right now uh, and say, oh, it's good that it's actually up on the day versus the US. I think just looking at this tells you that, that's really, I don't think is going to tell you. I think things have to happen in the US market at this point. So maybe it is, I will say, a small positive that emerging markets have stabilized. It's funny because we talked about this pre-market, but the local, which I know a lot of people on Twitter, they don't pay attention to what's happening internationally, for the most part, unless it's the headlines about Deutsche Bank and so forth. But the Shanghai was actually up 3 days in a row. One day while we were, so Shanghai, the China index, not the ASHR ETF, but the actual uh, index in China was up three days in a row. I think it was up Monday, Tuesday, and Wednesday. So, these things don't get any press, right? So I just think right now we're dealing with problems, uh, a lot of problems, right? And some of which just are happening in the U.S. So what are we looking at? Besides some of those relationships and what's going on. So two things that I mean, there's several levels that I've been talking about, right? I know everybody's focused on the 200-day moving average. I am going to need to see this level. This is a level that I've been talking about a lot, which is 28.17. I'm going to need to see that level reclaimed. So as it's falling apart here, we still have Friday, so anything could happen. How many handles is that? About 20 handles, 10, 20, 30 handle. Oh, a little bit shy of 30 handles. There's crazier things that have happened. We could also retake this Monday, but for now, it is what it is. We've fallen into yearly value. That's not something that I wanted to see. So I do act a little bit more defensive when I see something like that. I don't view it as a buy. When we breach support, I view that as a problem, not a place to say, oh, let's go ahead and add exposure. It could end up being that this is going to be a really nice buying opportunity, but I'm going to need to see the S&P reclaim some territory first. The Qs are holding, so if you're more, you know, positioned in technology stocks or more, by the way, there's not just technology in the Qs, consumer discretionary. There's a few others. There's some financials actually in the Qs as well, believe it or not, but it's mostly tech. But 176.19, so we have not fallen into value, and if you're trading more of those stocks, really, then that's a level for you to watch. 176.19. So again, not bad, right? Then we move over to IWM. Here's where it gets even more interesting. There's a couple levels that we've been talking about. We talked about in last night's member webinar. We're getting close to this 145.25. Why is that important? Because it's lining up on multiple time frames. So this is the weekly bar. If we happen to, this would be good support, I think. And this did come back at the end of the day. So if we go to the daily chart, there's this virgin point of control down here, which is a great place, I think, for the price action that needs to be realized. All right, so this is very close. I think we're talking about at this point, and I do have a residual IWM short position on. I'm kind of looking for that. We did talk a little bit about that in last night's webinar about how the risk reward is not that much. There's not that much reward left in this trade. So I was taking targets. At the end of the day, I was doing a little bit of day trading. If we look at the 5-minute bar, once we broke value for the day, which was right here, I went ahead and assumed, put some puts on and hit a couple targets, and then of course we moved back, which is a good thing, right? So that level now, I think that's very close, and it's funny because we joked around about this in last night's webinar, but how interesting would it be if this gets taken out at the same time the one in TLT gets taken out? So if we switch over to the weekly chart. in the TLT, in the long bond ETF, you'll be able to see that we're really, really close to this to taking out this level. Now notice how well this acted right back here when this one was taken out. So again, I'm not going to explain the whole version point of control concept, other than it's where a huge amount of buyers and sellers have met up previously, and it's an area that's been unexplored, right? So for example, in this back in here, right, this was what 2017, I believe. The price action went all the way through, got through this value area and did not hit this point of control, which again was where the biggest volume was in the previous year. And you could see me pointing to it right now. So these are very big areas of concentration of buyers and sellers. So what normally happens is these things get taken out, and once that is realized, then we see a reversion, right? So for example, we talked about this, in case you forget, or just didn't view that video. We talked about this one being taken out, and look at the move. This went from 120. Whoops. This went from 126 when this version point of control got taken out. This one as well. So again, they're not exact, right? Especially when they're close together. But this was the last one that got taken out here. I'm on the daily now, and that was a big reversion. And I, talked about that a lot on Twitter before it happened. And I'm talking about the one in TLT that's just above, which I think is, I think needs to get taken out. But we're so close, and this TLT is so overbought at this point. So to me, I'm starting to see things starting to get checked off my list in terms of extreme things that are happening in the market, and I think we're starting to run its course. Now there's a ton of breakdowns in individual names, but I think as far as owning quality names, I do think there will be a rebound in the next couple weeks, is my little prediction that I'm making, because I think things are getting to the point where a lot of my things that I need to see checked off, in terms of these levels that I'm watching, are almost all there. So now, do I just go on predictions, or so these are kind of my instincts? Do I just completely run on instincts? No. We've got to see we've got to see buyers come back in. Now, it is the week of technically a holiday week. So maybe that's next week. Remember, the first of the month is sometimes when buyers come back into the market, pension funds and so forth, institutions. So that'll be on Monday. So perhaps on Monday we see some money being put to work back into equities. I might be positioning for that towards the end of the day tomorrow. In the short term, meaning for tomorrow, this relationship is the one that is really, for me, that I've been paying attention to. I mean, every morning or every time we're up a little bit, any bounce gets faded right now in equities. And if you look at the other side of this, because right now, so I have a chart, the white line right now, sorry, let me slow down. The white line on this chart is TLT. The yellow line is SPY. So notice how the peak in SPY, which has been a pattern, has the high of SPY is happening, somewhere between a half hour to an hour after the cash open. And then what happens is sellers come in and knock this down, and where does the money go? It goes into bonds. So notice how the exact same time is the low point of the bonds, and buyers are coming into this. I mean, all day, up until the very end of the day. And actually, this did close on the highs, it looks like. But I mean, remember when equities used to do this, when they used to grind higher? Well, this is what's happening with bonds. So this relationship has to stop. So that's what I need to. And again, we laid all this out in the last weekend's newsletter, for things to happen. But right now, any bid in equities is getting faded, except for these little bounces at the end of the day that we're getting. So, and I'm incorporating this. I've been incorporating this into my trading plan. as best as possible, right? This is my morning note that I sent out. My plan for the day is to take profits where I can and not be greedy. It is really difficult trading options right now. I normally have, which I get a question a lot from new members in the room. How do you set your targets? Well, you can be have systematic targets out in options like 15%, 30%, 45%. However, if the market changes, you have to adapt to it. So, sometimes in the room I'm taking 10% targets and then taking the trade off at a 15 or 20% target, because if you're going to try to go through those, so my point is you have to adapt to it. And if the market is as choppy as it is, having 50% and 30% targets out there, and the stock doesn't, your option doesn't get there, and then 2 hours later the option is trading at 50% of what you bought it at, you can't live by those same rules that we had a month ago. So you constantly have to be adapting to what you're doing. These were a couple names that were on my list today. Neither one of them triggered. And I did some selling this morning. I try to practice what I preach. I got out of Salesforce today. I added some Salesforce into the weakness yesterday. Then I talked about how the market was sliding. We've also been talking about this relationship where if you look at the percentage, not the overall percentage of the day, but the overall percentage from the open, things are sliding. The things that are outperforming best are the bonds. And again, this was taken midday, but there's very little that is actually managing to go up at the end of the day. Very, defensives. I think GDX gold miners were the best performing thing. We talked about a short setup in Deere today. I tried that today. I took, again, very, very slim targets in this. I mean, taking a target at 345 where I paid 322. Listen, the market just is not going to give you a target at $4. So you just have to be realistic with how this market is working right now. So here's where again, I'm talking about some things here. The relationships, and if you draw this out further, right, this relationship of money going into bonds and money leaving equities, if you draw this out, see if we could do a month of this. So if we go 430, I mean, this is really where this has started. So really an inverse, talk about an inverse relationship, right? So again, the white line is TLT, the long dated bonds, and the yellow line is equities. This is pretty amazing. It doesn't usually work like this. Sometimes bonds and equities can go up together. Over the last month, bonds went up like crazy. I think up 6%, and that's almost exactly the opposite of what SPY did. So while my instincts, so the conclusion of this, without going into too many names, I can go over a couple names that had earnings after the close. Really confusing, I would say. There's some of the names that went up and some of the names that went down. And if it's not making sense to you, then you kind of wait until it does. And right now, I would think that for me, things, other than going through some of these relationships, just a lot of things are not making a lot of sense to me right now. But but yeah, so my instincts tell me that I think we're getting close to being fairly washed out. But I will be watching again for this relationship to start going the other way, right? Where bonds start to come down and equities start to come up. So that could happen. We could see that in June. And that's again what I would be watching. But this is crazy. This is a crazy chart. I think TLT versus SPY. Absolutely one for the other. The other thing was somebody asked me about bonds, and about inflows this week. Yes, there's been some inflows this week, but really where the inflows were back in April, and we talked about that too. There was some of the biggest inflows I've ever seen going into TLT, and that was in April. Before anything was really happening. So somebody was pretty smart with that trade. So, what else to kind of look at? I was talking about Microsoft a little bit today. I would be very wary of some of these names that are still holding up as well as they are. Either A, they're going to hold in and they're going to be end up, if they manage to make it through this, I guess we could call it a market correction at this point. If they make it through, then they're going to be great buying opportunities. However, I would refer to this as a general of the market. It's holding in. Same thing with like PayPal. So if it manages to hold up here, I think a great buying opportunity, because really some nice strength here. And even names like this that reported today, Vive, beautiful name. And somebody bought some calls right at the end of the day in this one, looking for higher, still higher move. But look at the volume on this breakout. But if not, so that's A. Or sometimes the generals are the last things to fall. So that's kind of what I would be watching. So I would be watching, and again, you don't have to have positions in this stuff, but just kind of watch what happens with Microsoft and PayPal. If they get hit, then hopefully it's the last. Then nothing has survived this correction. But right now, those names are holding up very well. All right, guys. So we'll end it there. I am starting to get a little bit more, I would say, excited about things getting checked off my list um, for this correction. I think I'm starting to see the light at the end of the tunnel. I liked what Stephanie Link had to say on CNBC earlier. She was talking about how she was buying in December and she was kind of hiding under her desk and pushing the buy button. That's kind of how it is with market corrections. You have to realize as well, and I've heard people say this, and I agree with this, is that these normal 5 to 7% corrections. So I think I already said normal, but they are normal. They are painful. I mean, certainly there's names that are doing this, like completely breaking down, but that's another story. But for the most part, corrections, you're supposed to see one or two corrections during the year. I think we had the luxury of going through a couple years where we just didn't have that. We had very shallow dips and very shallow corrections, but this is a bigger one. And also keep in mind, I mean, what is the market up still this year? Are we still up around 10% for the year? Let's see. So just try to put these things into perspective. For me, May has not been a good month, P&L wise. So I'm going to be really amped up to recover what I lost in May. So again, not the end of the world. It is just 1 month. I mean, yeah, we're still up 11%, and my portfolio is still up really nicely for the year. So unfortunate to give back some of the gains, a portion of the gains, but I think I'm still up. I haven't looked at my year to date, but I think I'm still up over 40% year to date. So the object again, when we have these corrections, is not to give back too much. But if you had a similar month to me as me, it happens, and you get over it, and not dwell on it, and move past it, and get ready for June. All right, guys, have a great day, and I'll see you guys bright and early tomorrow in the trading room. Thanks, everybody. Have a great night.